I've received a lot of really good advice over the years, and kind of depending where you are in your career, I'd say, especially getting into your first job is find a great company with a great culture that wants you to be successful and is going to help you to develop a foundation and a network that'll serve you well for your entire career. I mean, I was lucky, fortunate, if not lucky, to join Trammell Crow Company, and so many of the people that I met there have helped me be successful and succeed, for my entire career. And so I'm really grateful for that. And then I'd say as you get into your career a little bit, and I see this, I call it the 3-year itch, but let a little grass grow under your feet. Work hard, keep your head down, but be thoughtful about if you're going to make a change. Is this a lateral move, or am I really improving my opportunity and to achieve my career goals and whatnot?
Hello, everyone. My name is Chris Powers, and I want to thank you for joining me on the Fort Podcast today. This show is an open-ended discussion and journey covering real estate, business, entrepreneurship, and investing. I would love to hear from you by tweeting me at Fort Worth Chris on Twitter. Chris, welcome to the show.
Thanks for having me.
Thanks for coming over to Fort Worth, spending some time with me today.
Yeah, excited to be here.
Let's just dive in, and I would love to hear a little bit about kind of your story growing up and then kind of your business career leading up to today.
I grew up in Houston and got out of high school in 1992 and went to Texas Tech. Was the first person in my family to go to school. And I'd say in 94, 95, I met my now wife, Heather, who really inspired me to get focused and work hard. I knew that she was not going to marry a chump. And so anyway, Heather moved to Dallas in 1996, and I was graduating from school in 1997, and I had a relationship with a guy that was a VP at Trammell Crow Company, and was afforded the opportunity to interview at Trammell Crow and came into one of the best commercial real estate markets, industrial markets in the country at the time, and had great bosses, great mentors, and really it was sort of baptism by fire. Lots of deal volume and really some great people to learn from.
And so, before we get into Stream, one of the questions I had is, especially here in the Southwest, but you're now seeing it all over the country. Trammell Crow is like the king that put out all these next generation companies. I mean, almost every company is a Trammell. Somebody worked at Trammell Crow. You came from Trammell Crow. What was it about Trammell Crow that created all this inspiration to go start kind of this next generation of businesses?
Yeah, I would say, the culture that they created around winning, being entrepreneurs, taking measured risks. Mr. Crow was obviously a very compelling, persuasive, authentic leader, and he was able to attract similar talent. And once he was able to bring that talent into the firm, he took the chains off, so to speak, and let them go do their thing and be successful. And he empowered them with Trammell Crow's great balance sheet, Trammell Crow's great brand, their relationships in the market, and then compensated them based on the successes that they generated.
Yep. So you just mentioned that when you started in the mid to late 90s, it was one of the best industrial markets of all time. We're now sitting in 2020 in DFW, arguably the best industrial market we've seen in a long time. Can you maybe speak to what's different about then than today? And has it always been the best industrial market in DFW? Have we been on a 20-year run, or did we kind of dip and now we're back?
No, I think we've been on a 25-year run with only 2 years of negative absorption, if memory serves, during that entire time period. And a lot of that over the years has been obviously driven by population growth and companies relocating to the Metroplex and all the things that you've heard, central location, tax advantages, and whatnot. This cycle is definitely different. For the first time, with obviously the transition accelerated due to COVID to e-commerce has really forced some pent-up demand and people forming e-commerce strategies. And I think what's interesting now, and for the first time for industrial, location historically for industrial really hasn't mattered that much. It was kind of $3 net, $3 land, and as land values increased, industrial developers would move further and further from center. And the market that we're in right now, there's a lot of value placed on proximity to rooftops, proximity to labor, and that's really allowed, I think, for the first time, industrial to have sustainable rent appreciation.
Yep.
And to charge more for rents and tenants rather than being further out. They'll pay a significant premium. So you've got, land that could be used for multifamily or retail that now is being consumed by industrial.
It's crazy. I mean, literally, we're buying Class B industrial, which is already built, but you're now starting to see those business models. Like you said, I heard of industrial land trading for north of $10 the other day.
Yeah.
Which is crazy. Like you said, it's been 2, 3, 4, 5. Now it's getting to 10. Are they building the big bombers in the center city? Or are you starting to see like a smaller product kind of be developed?
You don't have I think if you had the ability to aggregate, sites of 80, 90 acres, you would see that, but it's not available. So you're seeing smaller, shallow bay industrial in the inner city and with the goal to reach the consumer within, the same day of online orders. But yeah, it tends to be converting older industrial, maybe even some retail to bring it into a more functional state, but not the 1,500,000 square foot to 1,000,000 square footers. Those have not found their way into the inner city. Not that they wouldn't.
Yeah, it's I guess it's a function of available land. Is it safe to say that kind of in a post-COVID world, the industrial market is actually better today than it was maybe in January and February, or is it still coming back?
Yeah, like the other product types, you have the haves and the have-nots. Yep. So, we lease and manage around 250 million square feet. Our occupancy rates across that portfolio continue to, they're about what they were when we went into COVID. I think, industries that are tied to hospitality and consumer goods, retail, those smaller businesses continue to struggle a little bit.
Yep.
The larger deals, 100,000 square feet and larger, the e-commerce strategies. I mean, those big deals we've seen a massive uptick in rents and demand. And then right behind that, or paired with it, you have capital markets. So it's sort of the perfect storm where you've got institutional investors and capital that's moving out of retail, out of hospitality temporarily, pressing the pause button for office. And so you have a lot of pent up demand,
Yep.
Coming into industrial as well.
I want to get back to industrial and office and retail and what y'all are seeing. But so you go to Trammell Crow and then in 2003, you leave and join Stream.
I actually joined a small firm in Dallas, Robert Lynn Company.
Okay.
And that was a pretty important step. Robert Lynn, really, really great collection of talented, nice people. It was a different model than what I was accustomed to at Trammell Crow Company, in that it was sort of pure street brokerage,
Yep.
Intense, sales processes and whatnot. It was a different style than what I really liked. And I was there for maybe 9 months, a year.
Okay.
And then was approached by Mike McPheen and Lee Bellin, who are the two founders of Stream, about joining Stream and starting an industrial business that we would set up as its own company, which that was very appealing to me, to own my own business and work with people that had already become successful. So I made the transition from Robert Lynn. And then looking back on that, I think being that short stop there was really important, because as we built out our industrial business in Dallas, as we built out our different business lines across the company, we've taken that sort of sophistication, professionalism that I was exposed to or experienced at Trammell Crow Company, and not to say that the people at Robert Lynn don't operate with professionalism and expertise, but really that level of sophistication, and then paired it with the grinding hard work, market intelligence approach that I learned at Robert Lynn Company, and look to merge those, and it's worked really well at Stream.
I want to talk a lot about Stream in the early days, but you mentioned Robert Lynn, and I've heard this like 100 times that it's one of the best places to like train and learn, especially if you're cold calling and just really getting going. Is there anything that like comes to mind of why they continue to come up in conversations, having like a great junior program?
I think they have been very disciplined and committed to that process.
Yeah.
And there's no shortcut to getting out of their training program. You have to know it. You have to do it well. They've got great leaders like Mark Miller and George Dutter and Tom Lynn, and of course, Mr. Lynn himself, who was a phenomenal, real estate professional.
Yep.
Leader in our industry. And so, no, they've not changed much over the years. I mean, they've of course evolved to be better, but they've got a phenomenal, probably the best training program in the city.
I love it. All right, so you get to Stream to start the industrial busin's. Like, what's your first day? What are you tasked with doing? What's starting an industrial business?
At the time I was having success as a broker, and so I felt like, okay, I just need to get back to the basics, right? I need to keep making calls. I need to retain the clients that I have, and then from there, I need to begin to recruit some people to join the team. At Stream, we talk about a three-legged stool: talent, service, and deals. So talent, recruiting, retaining, growing our talent. Service business, that kind of goes without an explanation. And then deals, doing deals, both investments and development. And the most successful people at Stream have all three legs to that three-legged stool. But I got focused quickly on our service business, and then reached out to my brother-in-law, who actually I had recruited over to Trammell Crow Company, Kyle Valentine, who now runs our Houston business. He came within a couple months of me joining, and was actually, very much my partner in launching our industrial business. And then several other people, one or two a month for the next 5 or 6 months, where we looked up in a year or so and had maybe 8 or 10 people in the industrial practice. And then we were organized by submarket, and calling on landlords and tenants, and just doing whatever we could to generate commissions at the time.
What did Stream offer when you joined then? I know y'all are in lots of markets now, but from a service capability to where y'all today, like, what has been added since you've joined the company? Like, did y'all have construction management?
We had construction management, we had brokerage, we had property management and accounting. And I would say that, in every one of those categories, we were far from reaching our potential or providing exceptional service.
Yep.
We had some really good people, but we needed to have more processes, more systems, more experts. But it was office, it was industrial, and bring up our game, so to speak.
You started this business, and then we'll fast forward 20 years. You're now the president of Stream. Can you talk about what market y'all are in today, what the business looks like today? And then I want to drill a little more into like what your job looks like. You're clearly not out doing brokerage activities anymore.
Yeah. So, the company's changed a lot over the years. We've had a very flat operational structure. And so I went from running our industrial business to leading our DFW business and our California business. But, with my peers that were running other markets, and we sort of ran the company. I describe it as like a pickup basketball game.
Okay.
We were having great success. We have a lot of really good players on the team, and as different challenges or opportunities came to us, we would, whoever had the time to commit to those opportunities would run point. What we've realized as we've had success in other markets is we need to improve on the connectivity of our company across the various cities and platforms. There are also opportunities for us to create platforms that are centralized, not necessarily by geography, but also by area of expertise. And so we're very focused now on office tenant rep, for example, expanding our industrial development platform, which we call IDS, our industrial development services. And those teams will be organized not by geography, but by a hierarchy that would go across multiple markets.
Is their hub Dallas, or they, like you said, they could be anywhere?
No. Before we started the conversation, you were complimenting our marketing platform, which we're really proud of. But Susan Bloomfield, who's our chief marketing officer, she's based out of California. So it's wherever the talent is where we're happy to be. Some of it is centralized in Dallas. We've got great leaders in all of our different cities.
I love it. From the outside looking in, and just through conversation, in the industry, I mean, y'all open up about a new market every year, or is that just what it seems like? How many markets are y'all in now?
It's been a few years since we've opened an office. We're in 12 different cities right now. So it's all the Texas, Dallas, Austin, Houston, San Antonio, Atlanta, Charlotte, DC, Denver, Orange County, and LA. Did I say Chicago? Chicago as well.
Chicago, yep. We'll
announce a couple new markets. We'll announce Nashville formally here over the next 30 days, and we'd like to be in Phoenix as well. I'd say a Manhattan, New York is an aspirational market, so we want to be in all the gateway cities. around the country. But we're not in a hurry, to be in any of those markets. We don't have some grand plan that we're trying to execute as fast as we can.
But y'all do have a proven strategy for entering a new market. So maybe my first question is, one, how do you know it's time to go to a new market? Is that somebody within the firm coming saying, I want to go open up Nashville? Or is that you or your team going, we need to be in Nashville, let's find some people to do it?
It could be any combination of a few things. So you mentioned, someone within Stream that has an itch to run a business and or move to a city. So it could be them raising their hand. It could be our clients in many instances have said, look, we've got a portfolio here, or we're really liking this market, and would you guys consider opening an office there? We've also, as you watch the way the economy in these markets and cities have evolved recently, it used to be that employees, the labor would follow the companies, and now that's changed very much, where the companies are following the labor. And so you watch the growth patterns for markets like Nashville and Phoenix and Charlotte, the Carolinas, Georgia, and so you sort of look at where we can operate a successful brokerage business, and then also couple that or pair it with our investment and development strategies. And so that would be how we pick the city.
And does each city have its own, like you started the industrial business, is each city kind of its own business with ownership in that city? Or sometimes it's just owned from Dallas with employees in that city?
It can be both. So I would say the origin of most of our Stream cities has the parent company Stream owning the controlling interest, and then the partners within those cities own a meaningful share. And so this is not some co-op sort of franchise model. I mean, they own a meaningful interest in their cities and benefit from its success. And then as we have people both within Stream and in those individual cities that provide exceptional results and contribute to our values and our culture, they also have the opportunity to become partners in those cities. So I don't know exactly how many partners we have across the company today, but it's more than 20, more than 22, 23, something like that. And it's something that we're really proud of and learned from Trammell Crow Company. One of the things Mike and Lee, the two founders of the company, said it was really important not only that you have partners in those individual cities, but they wanted to make sure that all of our interests were aligned so that we were partners with one another.
Yep. So do you have to have almost, and I'm fascinated by this idea of going to new cities, and does somebody have to have been in, I guess what my question is, they have to learn the culture somewhere before they can just go to a new city and be Stream. So does that you're usually hiring from within to expand, or somebody?
No, our model historically, and Mike and I, and we're always debating that conversation or that topic. If we have somebody that is ready and wanting to move, then absolutely. Historically, all of our new offices up until a few years ago were somebody that moved from one Stream office to another,
and that's maybe what I was alluding to.
Which we love that very much. You know them, you trust them, they're battle tested, the relationships are formed. It preserves our culture, which is what's most important to us. Some of those other offices, have worked great. Most have, some have not. Yep. And where they haven't, we've adapted and stepped in to add the additional resources. But when you know somebody really well, you know their culture. Sometimes these people that are willing to move are really young.
Yep.
And so they still have some professional development, to go through. And so you're taking a risk, you're taking more time, you're spending a little bit more money, and they may, they may or may not be capable of running a complex business with lots of moving parts and people. And so more recently, we've had a few people. Marty Pupil, who joined us, he was previously president of Colliers. He's now running our West Coast California businesses. He was a guy that obviously had great success, and we spent time to get to know one another and realize, in pretty short order, if we're that he would be a phenomenal culture fit.
Yeah.
He would fit right in, nice, passionate, honest, and smart. And so, if we have somebody that can check both boxes, Stream, and has had great success and is willing to move, it's hard to find somebody that's 15 years, 20 years into the business that says, hey, I'm ready to pick up my family and move to Charlotte or Nashville. So now we're focused on finding people in those markets and making sure they would fit within our culture.
You've said multiple times since we've been talking, and again, as an outsider looking in, it gets brought up, but this like market intelligence approach. What does market intelligence mean? And even when I'm talking to young people that might be, leasing homes around TCU, which is kind of where I started. To me, it just, I knew every house on every street that rented for this. I know who owned it, when it sold, blah, blah, blah. But y'all have always preached market intelligence. Just like, what does that mean to you, and why is it kind of the center of how y'all think about business?
You love real estate because different than other industries, it's unregulated, it's wildly inefficient. And you take a guy like Jason Moser, for example, who's been with Stream for 16 years. He was one of our first industrial teammates to join. He
was the guy that worked out of the back of his car. Every day.
Jason's got a printer in the back of his car.
I've heard of this guy. Yeah, he's a legend.
He owns a lot of real estate. He's a really smart guy. But you take that Brook Hollow submarket, for example, and there may be a few people that would know it as well as Jason does, but nobody in the world knows it better. And that's pretty powerful information to have, provided you know what to do with it. So understanding the supply, the demand trends, being a person that is really, really capable of communicating that well, and understanding how to act on that information, identifying imbalances within the market. And so that's why it's so important. And I think that kind of goes back to the Robert Lynn and Trammell Crow, where I think we've done really well, and guys like Blake Kendrick and Cannon Green and Ryan Boozer have made it much better. But it's taking that market intelligence, the information that we're gathering, and putting it into a form that is actionable for our institutional clients, to understand the markets that they're making these massive acquisitions in better than they would if they were to just come here and start contacting, random groups and brokers. And so we want to be known for having and providing the best market information across our entire company.
I get a quarterly Stream email with in the certain markets I've selected I want. And I don't mean to keep bragging because we're on the podcast, but it's truly incredible. I'll ask a question on that in a second.
You're nice. Thank you.
If you're coming out of college and you're looking for a job and you were just giving someone the high level, like, how would you say, go learn this market? Is that going to every building, writing it down, getting on CoStar, looking at rental rates, talking to brokers? Is it just kind of all the above? Is just picking a geography and becoming obsessed with everything in it?
Yeah. I'll back up for a second. So I think too often, as an industry, we push people into the market before they're ready.
Right.
And one of the things, we're very careful about at Stream, and especially when recruiting people straight out of college, is to make sure that we can provide the optimal learning and training experience. And we really want to be great. We want to take great care of them in their first job opportunity, because, if they don't have a good experience, it can stunt their growth and career development. And so we really want to be very careful about how we train them. Not to mention, we don't want people passing out Stream business cards before they're ready to do that.
Yep.
And so, really understanding the basics of proposals and requests for proposals and how to communicate with other brokers in the market, how to communicate with clients, and sort of really just having a good foundation. And that takes 6 or 8 months to begin to just learn to at least speak the language. But as you start getting into the market, the key, yes, is to go, like you said, you did it for TCU. It's to go block by block, street by street, understand the owner, know the owner, know the tenants, know their sizes. As you evolve and really begin to have a more macro understanding of the market, what are the trends that drive demand in that market? What are the industries that are most active? What are the economic cycles that would cause that market to do well or not do well? And in a market like Dallas or Chicago or LA, obviously they're very diverse across industries. And so you could have a period in time where DFW Airport's doing great and Garland, more of manufacturing, is not doing so well.
Yep.
So really being able to break down the various submarkets within a city is important.
Yeah, people that aren't from DFW always reach out to me like DFW is just like one market. I'm like, no, we've got
850.
Yeah. You can make a whole career just in DFW. So you just mentioned that y'all have done an incredible job, and obviously as someone that consumes y'all's information, putting it out, do y'all use some type of technology? Is it meetings that you host weekly? Like, how do you make sure that the information people are getting while they're out beating the streets is like making its way into something that everybody can learn from?
Yeah, great question. Thank you. Across all of our business lines, communication is central to any company's or business's success. And so aggregating that information, having a culture and an environment where everyone is willing to share, and especially as a broker, things like comps and deals in the market. I mean, those are the assets that you have to go to trade to win business,
right,
and make commissions. At Stream, we've got to create an environment where people trust sharing that information, and that means they got to know that it's being used the right way, and that they're going to receive the same benefit, from others on their team. And so we're crazy disciplined about our weekly meetings, about updating, the market information that we have in terms of tenants that are in the market or comps, and require that of all of our teammates. For a long time, I think we relied a lot on our brokers in terms of the quarterly reports that you're referring to do all the writing and do all the data analytics, and that takes a lot of time, obviously, away from their day. And,
yep.
And so we've done some things recently, adding writers and putting some marketing professionals around that process to make it a little bit more efficient. We've not had researchers, for example. I mean, our research comes from our brokers that are in the streets and
That's
doing
the best
deals.
Information.
Yeah, it really is.
That's what's really happening on the ground.
Yeah.
All right. A question came in earlier this week. Y'all have been in data centers for quite a while. I mean, is it fair to say that y'all were maybe early to the game in data centers?
I think we were very early to the game. Rob Kennedy and Paul Moser started our data center business probably 14 years ago.
Yep.
14, 15 years ago. And
how did that come about?
You'd need to get them to tell the story, but it goes something like this. They were fielding a bunch of phone calls, for tenants that were coming into the market, and there was a specific requirement, and they felt like, based on the requirement that they were just kind of real estate 101, right? Based on the requirement and some of the deal volume that they were seeing, they felt like it was underserved in terms of supply. And so they began looking for office buildings and industrial buildings that could meet that demand. And
yep.
And that was really sort of how they began to get to know the business. Mike McVean also played a big part in that strategy. And then as it evolved and as they began to learn more, we acquired a couple of data center portfolios, a big one on the West Coast in California, and then also began to build data centers. And I don't know where we would rank among data center developers in the country, but right there towards the top. We've got some really big development programs going on and active projects in Chicago and Phoenix and Texas, throughout Texas. But it's a big business for us.
How big a business is it now?
By dollars, it's pushing into the billions.
Wow.
But by people, it's we're developing and investing. We don't have a brokerage business per se, but they've got a big management model, but it's a significant business for us.
Is it fair to say that the anticipated demand for data centers is almost endless right now? I think I was reading something that even like a Google and a Microsoft, they can't even project 12 months out how much data capacity they're actually going to need.
Yeah, that's very accurate.
Yeah,
without mentioning names, but our pipeline right now within our data center business is the best it's ever been.
That's insane.
They're really, really busy.
And that's I don't know if it's pandemic proof. I mean, people are more on their phones if they're locked in their houses or
protecting and preserving data, and it's only going to continue to grow.
All right, so y'all manage 250 million square feet. Y'all get to work with some of the best ownership groups in the country, institutional, private. What makes like a great ownership group? Like, what do some of the best owners of real estate have in common that you just kind of see across the board?
I think people that empower us to do our job and do it. They trust us to make decisions on the ground. They're nice. They work well with our team and our staffs, and they're great communicators.
Yep.
We work with all sorts of landlords, but the ones that really trust you, the ones that have the infrastructure processes in place. Some of these companies that are growing quickly, those can be more difficult, because they don't know exactly what information they need, and reports are constantly changing. which is really, really hard on our property managers and accounting teams. You know all about that.
Yeah.
And so if they know what they need to do, they can do it really well. But when that information and those requests change frequently, it gets a little bit more difficult.
And from your seat, when you are kind of thinking about how the real estate's doing in the country, and y'all are now coast to coast, I was talking to somebody at Blackstone the other day, and they said that their real estate business helps their private equity business because they can almost get a feel by which tenants are growing and what industry. Like, y'all are now spread out across the country. Y'all must have amazing data as to like how the country is breathing. I mean, you can see different markets, which tenants are expanding and what industries. Do y'all use technology that you built? Do you have some third-party software that you use? Like, how do you manage all this data? Because you guys have almost 8 service lines and 12 markets.
Yeah. So, you bring up something that we're working on right now, and that's the aggregation of big data. So we hired a guy named Venkat Kundu who came over from Howard Hughes. He was chief technology officer there. He joined Stream probably 18, 19 months ago.
Yeah.
And we've really empowered him to build out our technology platforms. And we were, I would say, pretty far behind in terms of knowing what to do and what we needed to do. And so aggregating that data, both that's coming through our development business and our investment business, and then also our brokerage business, and putting it into an actionable form is something that he's really focused on right now. And that's where the entire industry is headed. Now, intuitively, we get a lot of that information just by talking to our brokers and knowing, that California companies or asking about Texas markets, and we're seeing, even brokers in markets like Chicago wanting to move. We just moved a brokerage team from Chicago to Charlotte. So intuitively, you pick up some of that just by being in the markets, but having that data really and being able to cut it up so that you can look at very different industries and identify trends is really important, and that's something we're focused on right now.
Talking about y'all's development business, y'all do industrial
office and data centers.
Okay. So in the industrial world right now, are you doing any spec? You already have a user in tow, a mix of both?
A mix of both, but most of what we're doing is spec. So right now we have about 15 million square feet of industrial projects in the pipeline. That's probably 30 or so projects. That includes all of our Texas markets, California, Denver, and Atlanta. We, as I mentioned before, I think towards the beginning of the podcast, as we've evaluated different opportunities to establish platforms, we set up an industrial development services platform, and that's organized and led by Cannon Green. Everybody's based out of DFW, but we've got Scott Swanwick that runs the West Coast. Bates Arnott, who joined us from Hillwood, runs the Central region.
He's back.
Guy. Yeah, he's back. Yeah. And then Dale Todd, who was an executive at JP Morgan, recently relocated from New York to Dallas, and he's running the East Coast, or the eastern half of the U.S. for us. And so the focus there really is to have one team of experts that's supporting the platform and our offices across the country. And so growing our industrial development business is priority number one right now. It's the best market or the best product class in the country for sure.
Yeah, for sure. All right, let's talk a little bit about office and retail. Those seem to be besides hotels, which we don't need to talk about. Maybe my first question is, and I bet if we had done this, 2 or 3 months ago, maybe the answer keeps evolving, but what's going to happen to office from your perspective? Like, is there any early data or signals that y'all are seeing that makes a great bull case for office? Not? I don't know.
I think the issues around office are going to have less to do with the office building itself, and more to do with the cities, and the way the cities are functioning. Some of that are going to be some of that's going to be around politics, for example. I think for the first time ever, you have geopolitical risk in the U.S. that these governments or cities or states will come and shut an economy down more quickly than the other. And I think corporations are going to make decisions as to where they want to be based on that information and how they measure that risk. But as it relates to the, and mass transit, that's going to matter a lot. I mean, people are concerned about getting on subways and trains and buses, and I think that'll persist for a while. But as it relates to the office building, I think there's going to be, if we do get a vaccine, and Moderna's today saying they've got a really 95% success rate or whatever. If that happens, we've got a hard stop. to this pandemic. And I think that office buildings will open back up. I think that companies are going to function much better. We spent a lot of, some really smart people were putting together, the whole idea that having communities within an office and culture and denser gatherings, that was the best way, most optimal way to operate a company in an office. And I don't think that, I think that they put a lot of time and thought into that. And I think ultimately that's where we'll get back to.
Yep.
There's going to be a hangover effect, of course, where we're going to need to be thoughtful about, spacing and how flow in an office. But I think in the long run, no, it's going to be right back to where it was. I think there are going to be some cities that will be winners and losers,
yep.
As migration patterns pick up again.
We're seeing eye to eye. I'm long the office. I have not talked to anybody that doesn't miss the office. Maybe we've learned you don't have to be there 5 days a week from 8 to 5, and it's certainly able to work remote or work from home 1 day a week. But I think people crave social interaction. That's how we've been
We're
for
social creatures.
Millions of years. It's not going to change now. I agree with the hangover effect, but maybe one more question on office. Are you seeing like leasing activity picking up at all? Or is everybody still kind of on pause waiting to just kind of see how this shakes out?
The only people that are making decisions are the ones that have to make a decision.
Yeah.
We're seeing the smaller companies, they're inclined to not do anything or even just let a lease expire and stay home for a little bit.
Yep.
Bigger corporates, they're making decisions because they have to. Landlords, for the most part, are flexible to accommodate, as far as timing and whatnot, because they need to be. Tours have picked up, though. If you looked at, where we were in June, July, and August and where we are today, I mean, our tour activities picked up significantly, but it's nowhere near, pre-pandemic levels. Yep. But it's getting a little bit better. And also, I think, the human mind sort of is quick to forget, painful experiences. Houston, for example, Harvey was a devastating hurricane and really caused a lot of damage and distress. And so for 18 months after Hurricane Harvey, every RFP that we received, the first 5 questions would be around hurricane preparedness and floodplain issues. And it was like month 19, and talking to Preston Young and Kyle, our 2 partners who run the market down there, it was like all of a sudden it was just over.
Yeah.
I mean, the questions were no longer, and everybody had just moved on. And so I expect once there is a hard stop to this, that there will be some good lessons learned, but we'll be able to return to using real estate as we have in the past.
I'm with you, man. I'm 100% with you. Maybe any commentary on retail?
No, one of the things we're monitoring for retail right now is how does that relate or potentially solve some of the e-commerce needs that are out there. So, I would tell you, if we had more time to spend on it, we would be really focused on some of the big box retail and how that might be converted. But the reality is our development personnel is so focused on all these other projects that are right down the middle of the fairway that we're keeping them focused and not distracted. But it will be interesting to see, how some of this big box retail and gets repurposed for or toward industrial, and how the communities handle trucks and traffic and things like that.
Between that and like converting malls that, might not structurally be ready to handle big loads, but obviously are going to be vacant with tons of space.
Are you guys tracking some of that stuff right now?
I'm talking to a lot of people about it because, we've been buying this Class B industrial stuff, and, it's already built. It's close to rooftops. It's got infrastructure around it. And we're, had we done this in April and March, we were talking to people right out the gates about, hey, let's go raise a fund to buy distressed, big box retail, and let's work on converting this stuff. And I've met a lot of people that are, whether it's technology or, better engineering or construction type, trying to figure out how this is going to work. Because then you talk to somebody that's working with like an Amazon that they have 1,500 projects right now going on across the country. And like half of that's new development and the other half is reworking existing space. I'm just excited to see the next 5 to 10 years how it's going to play out. I'm going to let really smart Einstein figure it out, and then I'm just going to copy whatever they do.
That makes 2 of us.
That's kind of the business model.
Well, and the malls, they're because of the parking, they're on massive acres. So
I mean, you take Ridgemar Mall here, it's a mile away, right next to some of the best neighborhoods in Fort Worth. It's like 30% occupied. And of those 30%, there's like an aquarium. Nobody's going to that mall, but it's on 85 acres.
Do you raise it? What do you think you do?
I don't know. So the first question is like, can the foundation handle the load?
Right.
And if it can't, do you have to come in and re-engineer all that? And what does that do to cost? But then you take like an Amazon or somebody that wants to be, let's talk about last mile. Let's talk about last quarter mile. I have to imagine it's worth the money to try and figure out how to rework these spaces. But again, I'm got a lot going on and I'm just going to wait for Einstein to do it. And then I'm going to copy closely.
Yeah.
Is there any markets in the US that maybe don't jump to people's mind immediately? You mentioned Nashville and some other places that you're going into, but are there any kind of interesting markets that nobody talks about as much that when you're talking about kind of this remigration of the country, we might see some new things boom? Like one I think about often is Waco. It's like right between DFW and Austin. It's right in the traffic corridor. I don't think it gets enough attention, but anything that just comes to mind?
No, I mean, we're focused mostly on primary markets and larger secondary markets. I would say Savannah, is a market with good proximity to Atlanta that has got there's a lot of industrial demand there, but in a few institutions that own product there, but it's not a really sophisticated industrial market. So we're actually making a trip out there December 9th and 10th with a big group to go check it out and do a little digging. We picked up a project that we're managing out there, which is what brought us, and now we're sort of interested to check it out.
So a lot of times it is just an owner that's like, hey, we're going to be in this market. We're going to do big things. We'd like you to be there with us.
Yeah. And I should say Link.
Yeah.
Link.
When you're developing industrial across the country, is it easiest to develop in Texas, or is it pretty kind of the same pattern no matter what market you're in?
No, it's Texas, is Georgia, Texas. I mean, Georgia's got some topo issues and rock and things that you have to deal with. But in terms of dealing with municipalities, I mean, those are going to be for far and away the easiest places to develop. California, the lead time it's difficult, depending on where you're at and all the different issues that will come up. Colorado, for example, we've got a site in Colorado, west of Denver that we've been working on for 30 months, 35 months. And I think we've got at least 2 more years before we'll even put a shovel in the ground. So the lead time for a well-located project, and depending on the municipalities that you're having to work with, it can, if you're not in Texas, it can take quite a while.
And to put that into perspective, I think one of the things that, I've done some development, y'all do a ton of it. One of the things that kind of gets me, I don't know if the word's upset, but you do a development project, you get a development fee. But usually the development fee starts when the project starts, which means we're kind of coming out of the ground. Do y'all have something set up to where so you take a California market where you might be in pre-dev for 2 years?
Yeah.
Y'all make any money during?
Yeah. What we're doing now is we're straight lining, the development fee over the entire duration of the project that our team's working on it. And it could be a little bit like a bell curve, where we get started early. But as depending on the structure, if it's a fee development or if it's in partnership, we've got a lot of development personnel with big salaries and payroll costs that need to be justified and covered during that time period.
For sure.
And assuming everyone's signed off on the project and it's moving forward, then we look to begin collecting development fees, if for nothing else, just to make sure we're covering costs. It's not going to be a profit center per se, but we look at it like, and most of our partners agree that we should all have skin in the game, and that the project should be able to cover that. The key is getting it right on the front end, as with your partners and your lenders, and as we're having those conversations, that they understand.
Are you seeing any projects get built that are multi-level, more than one story?
Just reading about the same stuff you are.
Yeah.
Some of what Prologis is
done any of it?
We haven't done any of it.
Yeah. I guess it only makes sense in like a Seattle or
Portland,
New York City.
Right location.
Yeah.
We've looked a lot more recently, kind of changing subjects, but at refrigerated space, there's a lot of demand there. But again, you only have so many hours in a day, and we're trying not to distract our teams because they've got projects that are right down the middle of the fairway that they're working on. But that's a space that's pretty interesting to us right now.
Yeah, we owned a cold storage building. It was a 3PL. It was like a 200,000 foot building. This guy leased it, and then he leased it out to much smaller operators. And what we realized is there's an enormous demand because a lot of the way the food and beverage world's going are these kind of niche-y brands.
Right.
So they
It's
only
like
need
98% occupied.
correct.
Right? 98, 99.
It's insane.
Yeah.
But if you want to go build a new building, it's really expensive. You have to build a massive facility. And so you need like a Campbell's Soup or one of the big boys to take the whole thing. I think there's a huge opportunity in the market for somebody that could stamp out these smaller facilities that could be leased to these tenants that require 10 to 20,000 feet only, or cubic feet, however they measure it. But again, it's like so cost prohibitive.
Yeah, and the lenders don't. The debt doesn't get it yet.
Yep.
It kind of reminds me of where data centers were 8, 9, 10 years ago, where you're building a building that's $1,200 or $1,500 a foot. And,
Yep.
it just doesn't. It's not a real estate play, and they can't really make sense of it.
Yep.
And that's where some of that cold storage development is right now.
Well, that's going to be kind of, you've seen it now. Airbnb, you used to not be able to finance like an Airbnb because it was short-term leases. I think there might be some of that we might see in office, almost like a new type of lease rather than these long 10-year leases. But yeah, getting the lender on board you kind of need them to.
Yeah. Yeah. Well, we're Ben Haught out of our Atlanta office has developed this rapid program where for smaller tenants where we're doing spec suites, you can identify or search our inventory online and find the small suites that are ready to go. You can sign a lease online. You can pay your rent by credit card.
Really?
Very fast, very efficient. I'll send you some details on it. But it's in its initial launch right now. We've got some really good momentum in Atlanta and Chicago, a few buildings in Dallas. But the whole idea is to really simplify that process, which is intimidating. If you're a small or new business owner and you don't have an extra minute in your day, much less to go try to get through a 25-page lease document or sign a 5-year lease when you don't know what your business looks like 18 months from now.
Yep. Couple more questions and then we'll bring it on home. But we've touched on multiple times kind of marketing, and y'all do it really, really well. So maybe first question is, how big is y'all's marketing team?
It's probably guessing on head count, between 30 and 40.
And when that's a big marketing team.
Yeah.
When did it become apparent that being exceptional marketers was just such a big part of the job?
Well, great question. We had a couple people at Stream going all the way back into the mid 2008, 2009 that were really great marketers. They were brokers, and they would take a great message, and then we had mostly graphic designers.
Yep.
And so the collateral that we would put out was really, really nice.
It was awesome.
It is and was. But we looked up about 6 years ago, and we had all graphic designers, and it's kind of like having a basketball team with 5-point guards.
Yeah.
You can be really good in one area, but falling short in other areas. And so we met a lady named Susan Bloomfield who had run marketing for a couple of larger firms and really was looking for an environment where she could be empowered to build her team and sort of her vision for what marketing can be, to the brokers and different business lines. And so she's built a diverse team of marketers ranging from, writers to content experts and social media and whatnot. So that team now it's multi-dimensional, and Susan, as I mentioned before, is based out of California, but a lot of care and attention goes into the content. It goes into the design. We don't want anything leaving the office that's less than exceptional, and even kind of getting into the basics like, marketing flyers for one-off buildings and whatnot. Those can be simple, but we still want them to look professional. We owe that to our customers. We owe it to our brokers.
I'm here to tell you, it is the best marketing in the industry.
You're very nice.
And I'm into marketing and branding. So, all right, last question on business, saving kind of a loaded one for the end, but the last decade, we've seen a ton of consolidation of businesses exactly like Streams. You've seen lots of companies get bought. How do you think about that? How does that create more advantage for y'all? And I won't ask if y'all are going to ever sell or get bought. We don't have to go down that road, but I'm just curious how you think about it. This world keeps consolidating, and Stream has not participated in any of that.
Yeah, so I appreciate you asking that question. forever's a long time, so I won't say we'll never sell, but
Yeah.
it's not even a part of our plan or strategy.
Yeah.
It's not something that we talk about ever.
Yep.
Despite being approached by several of the larger firms. It presents a great and very unique opportunity for us right now, because as you look at these big national firms, for the most part, they got the same sales pitch. They've got great, many of them have really, really great professionals, but they're limited by their size in some ways, and they're beholden to their shareholders or private equity that owns them, and that prevents them. And even during the pandemic, we've seen that it prevents them from, in some ways, doing what's right by their people, and rather than making a decision for their people, they're having to do things to please their shareholders or owners. And so we're fortunate to not have to be able to do that. And then you look at great companies like HFF and Trammell Crow Company, in its prior life, the Staubach Company. These are the companies that we aspire to be like in terms of our culture, the professionalism, and we're very fortunate, right, to make decisions that are very long-term in nature. Years, not quarters, not months. So as it relates to investing in people, as it relates to how we set up our comp and ownership structures, as it relates to how we invest in resources. It's been most apparent for the last 9 months, because you look at these larger firms and they're all cutting resources, they're cutting spending, and we're doing quite the opposite. We've hired more people in the last 9 months than we did the previous 24 combined, and we've added significant resources, and our technology spend, for example, has increased significantly over where it was last year. We look at this as a phenomenal opportunity for us to take market share and to take talent and expand our business.
Again, watching from the outside, looking in at the marketing, it seems like every day on LinkedIn, y'all have hired somebody new. I wasn't going to go down this road, but let's just spend maybe 5-10 minutes on this. So COVID hits in March. What does your world look like? Like, I know I was at a YPO meeting the end of February and literally asked a bunch of really smart guys. I feel like such a dumbass now. Asked a bunch of guys like, is this COVID thing even real? I mean, I'm talking 10 days before the Masters gets shut down.
Yeah.
So,
well, you shouldn't feel like a dumbass, because none of us knew the answer.
Nobody knew. I mean, it was crazy. So, but then you just made a comment. We've hired more. We're spending more. We're going to use this as a chance. So in March, I'm assuming you and Mike and Lee and all the leadership kind of gathered. Like, what did those how did you guys start making decisions that now is time to double down when the rest of the world is freaking out?
Yeah, well, we didn't make a decision then that we would double down, and Liz Sheff, who's our COO, is really she is really the cornerstone and brains behind our entire operation, whether it's our HR, IT, property management, accounting. She's a phenomenal partner and leader. But when I think it was March 16th, March 17th, and things were happening really quickly, markets were crashing. It was apparent that they were going to shut the economy down, and so we were running some pretty draconian models. As a property management business, you're worried about getting reimbursed, just payroll and things like that. Much less not, we were anticipating that fees would drop significantly, but you start looking, playing those models out into weeks and months, and it gets pretty scary. And so, we had to call Mike, Lee, Liz, and I, and several partners, and Mike said, "Look, here's the deal. We've been very fortunate, very blessed over the last several years. We've made a lot of money as a company off the backs of all these people that are working for us. And so, get out of your mind any idea that we're not going to lay anybody off. We're not going to furlough anybody. The last thing we're going to do is put people, our people, out when they need us the most." And we all agreed, all partners suspended salaries to zero, and we reassured our people, look, we're gonna do whatever we have to do to get through this, but your jobs are all safe. And I think they appreciated that, and were willing to work really hard, to communicate with our clients and to do what it took to keep their teams safe. And then I would say May rather was our worst month. It was like that was the real bottom for Stream, but we're fortunate because we have a diverse business. We have our brokerage business, we have office, industrial, data centers, and then really our development business and our investment business. When you harvest some of those projects, for the benefit of the balance sheet and the company, we looked up our balance sheet in March. It's better today than it was then, coming
Awesome.
out of, and I mean like significantly better, which is phenomenal. As a company, we distribute 5% of our profits each year to our people, to our employees. And we told them in May, we said, look, we're not cutting salaries. We're not letting anybody go, but we are going to hold off on distributing profits. We want to make sure that, we've got cash reserves to get through this. And anyway, in July, we determined, okay, we're out of the, we're safe to go ahead and give our people what they've earned and deserve. And we distributed 5% of the profits to the company.
That's so awesome. Not at y'all's scale, but we have a very similar story. March and April I've learned, I'm relatively young. I've learned more about leadership in the last 7 or 8 months, but we were able to just bonus our entire team. We just sold a big portfolio.
Congratulations.
And it was the coolest day of the year. It was awesome. And if you had told me in March, April, or May that I'd be doing that, we had a portfolio under contract. It got dropped second week of COVID. I remember looking at my partner going like, I don't know if anything's worth anything anymore. I mean, if the world's shutting down, and then that happened in September, we were able to bonus in October, and it was the coolest day of the year.
Everybody was just,
yeah.
Well, that's when they know they work for a great
It's
leaders
awesome.
and great company. And
It's awesome.
Yeah. Congratulations.
Thank you. All right. A couple personal questions, and then we'll head to lunch. I developed a morning routine throughout COVID. I've never had one. I was the guy that got out of bed, got in the shower, and started getting on the phone.
Yeah.
Do you have a morning routine?
It drives my wife nuts, but like when I wake up, I am up. I don't think I've ever used snooze in my life. And so I kind of just hit the ground and go. And so usually I'm in the shower and going into the office. Occasionally, if there's nothing, like during COVID, obviously we weren't going into the office. I might go exercise or watch CNBC or something for a little bit. But I wouldn't say I have a specific routine, but it doesn't take me, more than a couple seconds to wake up.
What time do you wake up?
5:30 to 6.
All right, fair enough. Somebody the other day said like 2:45 in the morning.
3:30.
I didn't get that.
No, that's my mom, but I'm not there yet.
What's the best advice you've ever received?
I've received a lot of really good advice over the years, and kind of depending where you are in your career, I'd say, especially getting into your first job is find a great company with a great culture that wants you to be successful and is going to help you to develop a foundation and a network that'll serve you well for your entire career. I mean, I was lucky, fortunate, if not lucky, to join Trammell Crow Company, and so many of the people that I met there have helped me be successful and succeed, for my entire career. And so I'm really grateful for that. And then I'd say as you get into your career a little bit, and I see this, I call it the 3-year itch, but let a little grass grow under your feet. I mean, work hard, keep your head down, but be thoughtful about if you're going to make a change. Is this a lateral move, or am I really improving my opportunity and to achieve my career goals and whatnot?
Love it. All right. One more question. This is a big one. If you owned a billboard, call it on 75, very busy freeway in Dallas, and you could put anything on that billboard, what would you put on that billboard?
Be nice.
I love it. Be nice.
Be nice.
Thanks for joining me today.
Thanks for having me.
This is great.
Appreciate it.
Hey everyone, it's Chris here again. Thank you so much for joining me on this journey. If you enjoyed the show, please subscribe to us on Apple Podcasts, leave a 5-star rating, or write a quick review. Thanks again, and I'll see you on the next episode.
Chris Powers is the founder and CEO of Fort Capital LP. All opinions from Chris and guests of the Fort podcast are solely their own and do not reflect the opinions of Fort Capital LP. This podcast is for informational purposes only and should not be relied upon for real estate or investment decisions. The Fort with Chris Powers is produced by Straight Up Podcasts.